Hey everyone, so this is Euro USD, and we're going to do a couple different examples, maybe even on a couple different pairs, and just show you how a trade can be different, whether it's pro trend or counter trend. And I just want to show you a couple ways of managing a trade as well. So right here, I want you to make note that we hit something, we get a retracement, we hit something, we get a retracement, and we hit something again and we get a retracement. Now ultimately, if I look far enough left, I can pretty much guarantee you that we hit different demand zones. So we hit a demand zone, we get a retracement, we hit a demand zone, we get a retracement, and now we tapped into another demand zone. And ultimately, for the most part, we'll get some sort of a retracement every time we hit one. Sometimes it goes right through one, but more often than not, when it comes to a 4-hour zone, we get some sort of a retracement. Now, with this in mind, I want to just show you how to play a counter trend move. So we're obviously quite bearish on the 4-hour. There's no doubt about that. We tapped into a 4-hour demand zone here. Now, how would we play this pullback? Well, for myself, I need to see some sort of a change of character. And here we already have one in play. And what I mean by change of character is, once again, we swept the lows, we swept the highs. So just to show you here, now this is our last form of supply. Now, when you're pulling these supplies, I want you to look at something here. When this candle came up, we had some sort of a reaction and this doji got dropped. So this is where you're obviously reacting to the whole range rather than just the 15-minute supply. And that's likely, let's see, is that a supply on something else? It's more or less, I guess, a 20-minute supply. I cycle through times frames between 10-minute, 15-minute, 20, and 30 to get a cleaner POI sometimes. But I always pay attention to how something reacts. For example, if I have a zone pulled like this, but I can see a reaction underneath it, to me, obviously, a bigger range is in play here. Now, with that in mind, I want to talk about our change of character. So we have our sweep of the lows, which is our chalk bottom, and we have a sweep of the highs, which is chalk top. And ultimately what we have here is a reaction point is probably right here. And to me, this doji would be the responsible demand zone for taking that reaction point out. Now, as always, we always have our extreme point. So we have another demand zone right here as well. So now what we'd be looking for is ultimately price to come tap into one of these zones and give us another change of character and a flip. So our flip obviously occurred from here, and the backup zone would be from here. So what I would look for now is for it to tap into our execution time frame. Let's maybe actually rewind that a bit. What we'll even do is rewind it one more. Now, what I want to show you here too is what do you have sitting here? Right here we have liquidity, a form of inducement you could even say, which would be our money. So this to me would probably be more or less liquidity, whereas this little area here would be more or less inducement. It's a little better when you get a pullback, but sometimes it just drops little candles like this, which is totally fine. We could even count this point here as inducement, but the main point is there is a bunch of resting orders sitting here. And we have our flip zone in here with a change of character. So this is a heavily counter trend move. Um, Obviously our 15 is confirmed bullish because we took this high. We pulled back. Let's actually just mark these out just to show everybody. So you had a high here. That's your last high that put in this low. Now, when this high gets taken, you could say this low put in this high. You have sort of a pullback here. You could even almost say, let's see, how many pips is that? So that's about 10 pips. That's enough to be classified as structure. Some people say 15 pips. That's really up to you. I'll class 10 pips as a pullback myself. And you could ultimately say these are structure points. Now, this is where the 15 can get quite messy sometimes. And it changes trend a lot quicker than 4-hour and daily, obviously. So you have a form of a supply zone, but we also have liquidity here, or inducement. So it's very much so okay for this pair to turn bearish to come grab this liquidity. Keep in mind, right now, we are confirmed bullish. Whereas if we come down into one of these zones, we become unconfirmed bearish. So let's just see how this plays out. And ultimately, with this being as heavily counter trend as it is, I wouldn't be shooting for the stars and trying to run these highs or anything. Myself, I would be likely just trying to run the high that failed to put in a new low. So in this case here, we have this sort of high here, and we can assume that to some extent that this high is weak, as it doesn't run this low. Now, with this being as counter trend as it is, again, we're not going to shoot for the stars. We do shoot for the stars with pro trend moves, but this is definitely not one of those scenarios. So in this case here, we have another change character that we're waiting on. You know what? Let's actually just wait. Let's actually call this a supply zone. So this is our last sort of a supply zone. Now, in this particular case, we get a reaction off this zone. Sometimes you'll take a loss on the first zone and it'll come to the zone below, and that's totally fine. We can't predict everything the market's going to do, but here we have a supply zone. Now, I picked this particular example to show you something that has multiple reaction points, because sometimes people don't know which reaction point to go with, and this particular example allowed me to show you which reaction point and why. So here you could start looking, you can be like, well, this is a reaction point, you have another reaction point right here, we're currently reacting again. Now you have 3 areas of reactions here. Now which reaction point would you go with? Myself, whenever I get an area that has multiple reaction points, I always look where I got the greatest reaction from, so the biggest pullback. So in this case, it wouldn't be this area, and that one's pretty relevant too. Either one of these would be fine, but they're better than the first example. To me, this would probably be the reaction point, as the largest pullback came from it. So I would go with this as the reaction point. Now, we've swept the lows, we haven't swept the highs yet. Now here we complete our change of character. So we sweep the lows. And we sweep the highs. Now, you have a couple of ways of looking at this too. What took out the reaction point? Well, as if you remember what I said earlier, there is always shit in wicks. So this would make this a valid area for me to trade from. With that in mind, I also know that it could come to the extreme. So you have two choices here, depending on how sure you feel of yourself and how much you trust yourself. You could A, execute an order off here, or you could wait to see if this zone reacts and wait for one more break of structure to confirm that this is indeed going to keep going up. So this would be a tap into my trade. I'd have no problem executing this. I'd even have no problem taking a loss here and taking another trade from here. But if we want more confidence, we just wait. So now you have another break of structure where this high fails. So now you could say you have another area to enter. So we have a break structure here. These are how fine the details we look at, and that's why I recommend that most people start with one pair. Once you're consistent with one pair, you can always add another pair or two. So whether you enter down here or you want it to be more conservative and enter on this black doji, it wouldn't matter. Both are valid. Completely up to you. This would be your tap in if you entered up here instead, which is totally fine. And we want to talk about management. So there's a couple different ways of managing. Now this is counter trend. Myself, I would likely take the majority of my profit here because we are a counter 4-hour trend and we're not shooting for the moon. At the same time, this can go quite a bit higher. So how do we manage this trade properly? So there are several management tactics, and how you want to do it is completely up to you. Management technique 1, and this is probably my favorite technique on Euro. If my stops are 2.5 pips or smaller, what I'll do is I'll basically wait till it gets to 4R, and what I'll do is I'll close 20% of my position size and I'll leave my stops open. Now the reason I do this is a lot of times it'll do something like this and then go up, whereas if you break even too soon, it'll basically take you out. Option 2 is just break even and move your stops to entry, which I use more if my stops are above 2.5 pips, or on a more aggressive pair such as G or gold, where I break even completely, as those pairs don't revisit the origin of the move often. Euro in particular seems to like to do that, so this is a good way of managing Euro with the partial out at 4R. However, I'm going to leave management up to you. So whether you break even here and move entry to, or move price to entry, or you end up partialing out, completely up to you. Now looking at this and being reasonable, as we are heavily counter trend, you would definitely be advised to pay yourself as you run these highs. These highs are expected to go as they've failed to run these lows, which make these highs weak. So even though we are counter trend, we can still say that these highs will likely go. Now, it's always good to pay yourself, but if you're just not sure and maybe you want it to go a little further, and it could, you could say something like, I will pay myself 80% here, and I'll leave the other 20% running. And whether you left your stops open or not, that's completely up to you. Now, there is another way of managing. Say you went break even here. You could also trail your stop loss. Now, I don't do this often unless the price action's shoddy. In this particular case, price action seems to be quite bullish. So what you could actually do as a third technique, if you choose to do so, is just trail your stop losses. So what that looks like is you don't actually take any profit, and ultimately you could just say each time a little bit of a swing low makes, you just trail your stop loss till it takes you out. Now, depending how that works out, this may work out as more profit or it may work out as less profit. A lot of times it's safe. So in this particular case, you would get stopped out here at 6R in profit, which is still not horrible. A lot of times price will continue on higher. You also don't have to get as aggressive with this. You could leave this stop even a little bit lower, give it room to breathe. Some people are really aggressive with these. Some people give it some breathing room. It's completely up to you. But if you wanted to give it some breathing room, you could say that this is kind of the new swing point. And you could basically just leave it and just slowly move it up. If you get too aggressive with moving your stop losses, it'll likely do something like this where it takes you out too soon. Myself, like I said, I don't use this often. I would rather partial out 80% right here and then just leave 20% running. And if it ends up running on you, that's great. If it doesn't, no big deal. You've already paid yourself. This trade owes you nothing. But sometimes they continue on running. We never know. So this one hasn't taken you out yet if you were trailing stop losses, but it's completely up to you how you want to manage. And myself, at this point, I would definitely lock in some of this profit if I was trailing. You'd be silly not to. You always have to have a way of paying yourself. So even if you wanted to move it here or even move it here, at this point this trade has gone quite a bit further than you expected to. And if this did take you out, this counter trend move would pay you 19R. Whereas myself, I am more than happy to take 70 or 80% off these highs and just leave a little runner on. You never know what these little runners are capable of. I've had these little runners run an extra 80, 90 pips and suddenly 20% of your trade turns into another 10, 15R. It's very possible. So this here stopped you out at exactly 19R in profit, which there's nothing wrong with whatsoever. So that's the downside to trailing your stop. The upside to trailing your stop is you're always securing profit. I know a lot of people that only trail. Myself, I usually leave stops open, or I'll just break even and pay myself in a couple of places. Now, if you chose not to trail, and you chose to just pay yourself 80%, let's see what that 20% is capable of doing. And this is not always going to work out like this, but you don't know when this is going to stop. So considering you've already paid yourself, you've probably taken 3 or 4 more trades in this whole area as this price action continues on up. But you can see how quick something like this could add up by leaving a runner on. This isn't something you do with FTMO, as you know, due to news events and stuff, you don't want to get taken out. But it is definitely something that can pay you big time if you just have the patience. So imagine that you did leave 20 or 30% on and this did carry on out. So this trade is at 54R. If you had left just 20% of your trade on after you paid yourself 80% at 10R, which is an 8R. So if this was risking 1% and you closed 80% at the top here, you would have paid yourself 8%. The remainder of that 20% that you left on right now, at 54R, you're looking at roughly an additional just over 10%, about 11% here on top of what you've already made. So now this trade has paid you 19%, which is pretty good considering it was a counter trend trade to start with. And again, a lot of people don't have the patience to do this. A lot of people are on funded accounts, so they can't do this. How you manage is completely up to you. I just wanted to show you a couple different ways of doing this. Let's do a couple more examples, and I'll show you examples of how to trade pro trend instead of counter.